Hi Slopers, Tim Knight here, entering his 7th year of blogging, God help me. I just wanted to look at a couple of categories here. I'm going to look at 5 different longs and 5 different shorts I've got right now, just to give you a taste of the kind of charts that I like these days. We'll start, as usual, looking just quickly at the ES and the NQ. I guess we bears have our answer as to what it is required to make the market fall, and that is a major unprecedented industrial catastrophe in one of the top 3 economies, plus a new war. So if we get both of those events, the market will go down 6%. It's astonishing to me. We see here the broken wedge, and really this fall was about 5 days or so. Kind of a waterfall decline, and just recaptured every smidgen of it. It's weird, the Libya war is still going strong, and the things in Japan seem bad as ever, but strange. I don't know. Very strange. Disappointing. Anyway, but we still have our broken wedge, and to my way of thinking, as long as we stay beneath this last intermediate term high at 1331.25, there's still an argument to be made for the bearish case, but this is a very, very robust surge and a little disconcerting. In Q, same story, obviously, bit of a different pattern, and still beneath that last lower high. But unless things turn down hard and rather soon, the notion that this wedge has import starts to get kind of weak. But let's turn our back on the indexes for a bit, and let's look at a few longs and a few shorts just to get a flavor of what I'm buying and what I'm selling. First long here is CIG, and very, very pretty pattern here. Very strong day for this one, over 3%. Kind of a Uber cup with handle there on CIG. NTES. This one it's pretty cool because the Chinese internet stocks seem to be doing really well. I'm a little skeptical of it only because in the past we've had this breakout pattern kind of fizzle away, and then this breakout pattern do something for a while and kind of fizzle away. So this stock seems prone to fizzling. For the moment, it looks interesting though. So again, that's NTES. FNSR, this is a bit more of a getting them while they're battered situation. An inverted head and shoulders here, nice breakout and a retracement to the neckline, and pretty big boost in volume there too. So this is one of my more favorite ones. And I got to tell you, if we were in a plausible bull market, I would be really, really excited about charts like this, because these are really pretty. These are good long charts. The thing that just sticks to my craw is that I really have trouble convincing myself we're in an honest to goodness bull market. But these charts, in and of themselves, are pretty nice. This one I mentioned specifically earlier, VRTX, it gives its own post. Nice breakout there, again on over 3%. And I'll just end it there. Let's look at a few shorts. AFL. We have here a triangle that's been broken, retraced, and starting to fade away. And on a day like today, when stocks are up across the board, for a stock to be down over 1% is pretty encouraging for a short position. Ego, one of the mining stocks here, again a nice symmetric triangle, plus a series of lower lows and lower highs, plus the fact that I think mining stocks in general are pretty good shorts. Goog, something I very rarely show, but I think is pretty interesting with respect to this resistance at 588.39. HIG, this is another insurance company, I think, or Hartford Financial, maybe, I don't know. This one I've got to stop at 27.34, just above that line, but I like the broken ascending trend line there. And finally, an energy stock, Line, L-I-N-E. This is Lin Energy, floating rather high above this support, plus a gentle series of descending bars here. Again, lower lows and lower high. So and a nice clean stop there, I would put at 39.40. So in a nutshell, not real thrilled with the market's action. We were having a kick a couple of weeks ago, but that kick is gone. I'm kind of reined things in again. So I'm only about 50% committed. My positions are a mix of long and short, mostly on the short side, but I've given you a taste of each flavor. But the thing is that VIX kind of says it all. We look at this and we went from 15 to 30 plus, and then back down to the teens again in a very, very short amount of time. In the olden days, this sort of like lift and retracement was measured in months, or even almost years. And even last spring/summer, the sort of lift up and then the descent down took a while. This is kind of just a burp in the grand scheme of things. So I thought we had a nice clean break there that would really start to create some action, but no such luck. We'll also probably get some other weirdness with the end of the quarter coming up on Thursday. So we'll see what machinations are at play there. So anyway, playing defensive, trying to play it safe, and keeping it half in cash and the rest a mix. So not going full bore by any means at this time. Let's all keep in mind that POMO does run out. The QE2 runs out in a couple of months, to be followed, most people assume, by QE3 some weeks later. We'll see about that. Anyway, that's it for my day. Not much else to say, and I bid you farewell and see you Wednesday. That all rhymes.